So last week I made a video on ETFs that produce income and reviewed 3 of them. But this week I wanted to shift the focus and switch to something that focused more on growth. So today I have 3 ETFs if you're looking for growth in your portfolio. Hey everyone, and thanks for joining me today. My name is Matt, and as I mentioned in the intro, today I have 3 ETFs for you if you're looking for growth in your portfolio. Now, just like last week when I talked about the income producing ETFs, I do have a set of criteria I use as a screener to identify these 3 ETFs, and then I'll explain why I chose these 3 as we move forward. But first, let me just give the disclosure. This isn't financial advice, shouldn't take it as financial advice. This is just for your entertainment, and if you have any questions, always feel free to speak to an advisor or seek guidance for help with managing your portfolio. So the first thing that I focused on for finding these ETFs is these are all growth-oriented ETFs. They are not value ETFs. And yes, there is a difference between growth and value. We're not really going to discuss that today, but let me know in the comments down below if that's something you have questions on, or if you'd like for me to do a video discussing the difference between growth and value investments. Second one is, as many of you know, I like cheap investments. So for this week, I wanted to specifically focus on ETFs that have an expense ratio that is below 0.3%. The third one I have is I wanted to give you ETFs that have different market caps. So we do have small, mid, large, and mega cap this week. That being said, when we start to move into the large and mega cap ETFs, you will start to see some overlap between those investments. But again, I wanted to make sure I was giving you options for different kinds of market cap investments. And lastly, these are all fairly liquid investments. So if you needed to buy this position quickly or sell out of this position, then you won't have to worry about finding a buyer for selling out of this position or finding a seller to purchase it. I wanted to make sure that these were all investments that were liquid, in case you needed to dump it quickly and take the cash. So with that said, let's go ahead and start this off. And we will start with the largest ETF by market cap we're going to take a look at, which is Vanguard's Mega Cap ETF. Ticker symbol for that is MGK. No, not like the rapper. I guess like the rapper, but this one is for the ETF. So with this being a mega cap ETF, this ETF invests in the largest companies that are publicly traded. And of those largest companies, it looks for ones with strong growth in their earning per shares over the years, as well as what they are forecasting for the future. With this fund, you get exposure to some pretty well-known companies. That'll be companies like Apple, Microsoft, Home Depot. You see the list there in front of you. So you get exposure to some of those more well-known and well-established companies. This ETF is the most expensive one we're going to take a look at when it comes to price per share. But that said, if you look at the companies that you get to invest in, around that $175 share mark, it would cost you so much more to buy all of those companies individually than it is to buy a share of this ETF. I think Amazon's trading close to like $2,000 or $3,000. I forget exactly where they are, but this is $175. So you can buy a lot of shares of this ETF and get exposure to multiple companies for the price that it would cost you to purchase one share of Amazon. The weighted average market cap for this ETF is over $500 billion. Again, emphasizing that this fund really looks at the largest companies in the public market. With the PE ratio at 35.2 times, that's exactly where I feel like this should be. Again, since this is a growth investment, it makes sense to have a higher PE ratio. With the turnover ratio at 14.3%, I admittedly thought that was a little high given that this is an index fund, but I then realized from looking at the other companies, it's about on par with what we see with these growth companies. So while that seems high, it seems to be about the average when we're looking at growth ETFs. And if you're not familiar, the turnover ratio is just basically how much the companies are buying and selling or changing the positions inside of the ETF. Now this does have a dividend yield, and that is 0.76%, so nothing crazy, but hey, it's kind of cool to get a dividend while also investing in growth companies. And lastly, the reason why we love Vanguard funds is this is a very cheap fund to own. It's only 0.07% for the expense ratio, so nothing expensive to own, and also with Vanguard 0 fees, makes this a very affordable investment to start with. So who would benefit from this investment? Well, if you are an investor that looks at companies with a financially sound income statement or balance sheet, this one might be one worth taking a look at. Also, if you're pretty risk adverse but want growth inside of your portfolio, this might be one worth considering because it does offer you companies that are experiencing growth, but companies that are a little bit more established and won't be as volatile as newer companies or companies that haven't turned a profit yet. And just to keep everybody out there on their toes, we're going to move exactly to the opposite side of the spectrum here, and we're going to be looking at a small cap ETF, specifically the iShares S&P 500 Core Small Cap ETF. Ticker symbol is IJR. And as the name states, so this invests in small cap companies, which means smaller companies that are listed on the public markets. Now, when you are looking at small cap ETFs, one of the things I always notice is when you look at the top 10 holdings in this, some of these companies you probably never heard of before. And I know when I looked at it, there was two that stood out to me as ones that I know. That's going to be Wingstops and Stamps.com. And I'm sure I've heard of the other ones before, but they're not the first companies that come to mind for me when I think about investments, which is kind of the unique part when you invest in small cap ETFs or just small cap stocks. Sometimes when you invest in small cap investments, an issue you might come across is that they can be an illiquid investment, or there's just not as much of a market for small cap companies out there as there is with some of the larger, better known companies. But one of the fund's objectives is to avoid companies that are illiquid and only invest in small cap companies that do have high liquidity. All right, let's talk about these digits here for IJR. So it's trading at around $70 a share, making it a relatively easy investment to get started with and buy a few shares up to start building your portfolio. A little bit cheaper than MGK, so if the amount of money you have to invest isn't as large, this could be something worth looking at. And as we could see, again, comparing it to the Vanguard fund we just looked at, the market cap here is 1.7 billion compared to the 500 something billion that Vanguard's fund was. So that just should emphasize or reiterate that these are very small companies. And if you're not familiar with market cap and how that number is calculated, basically all it is the share price multiplied by the number of outstanding shares. This one does have a slightly higher turnover ratio though. It's around 16%, so it does seem like with these growth ones that shouldn't be anything to worry about. And since these are ETFs, they're a little bit more tax efficient, so it's not something we'd have to take into as much consideration as we would if we were looking at mutual funds. Now, oddly enough, this one does have a fairly high dividend yield for a small cap ETF, coming in at around 1.7%. Also, I kind of skipped over this, but you'll see I didn't list a PE ratio here for the small cap. That's because it's actually a negative PE ratio. Now, with these being small cap companies, I'm not as concerned with the PE ratio because not all of these companies are going to be profitable yet. So that's not really going to be one of those key factors I look at for these small cap investments. And I just left it blank there because I didn't want to scare anybody by seeing a negative PE ratio and automatically assuming this is a bad investment. It's PE and other ratios are all just relative towards the style of investment you're looking at, and that's just why I left PE blank here. And this is the cheapest fund to own with an expense ratio of 0.06%, always something I enjoy seeing. So who would benefit from owning this investment? Well, if you're somebody that's looking to gain exposure to the smaller companies in the public markets, then this is definitely one worth taking a look at. And if you're somebody that's looking for what I like to call out of the ordinary investments, this also might be one worth considering. And what I mean by that is, when you turn on the news, you see the same companies over and over again. You hear about Amazon, Facebook, Tesla, Apple, pretty repetitive. And with these small cap companies, they're not ones that you typically hear as often, so it allows you to get exposure to companies that might not be as popular in the market, but saves you the time from having to do the research and specifically finding small cap companies that perform well. Now, who wouldn't benefit from this position though? And that would be somebody that is completely risk adverse or trying to minimize the amount of risk they have in their portfolio. By their nature, small cap companies are going to be a little bit more risky and aggressive of an investment when compared to a large cap company. So if you're trying to avoid risk, you might want to look in another direction than a small cap investment. And if you're somebody that already has a large portion of your money in cash or in a money market fund, this also might not be the best investment for you. Because with this ETF, the second largest position in here is a money market fund. And at a time where money market funds aren't performing that well, it's a little strange to see that as the second largest position. Now, that being said, it makes up like 0.6% of the entire ETF itself, so it's not huge. It's not like it's 50% of the ETF, but it's still just worth noting that it is the second largest position in here, is a money market fund. So again, if you're somebody that already has a lot of money in cash or in a money market, CD, whatever kind of cash position you have, then maybe you'd want to consider other investments that don't have exposure to money market funds. And lastly, we have the Fidelity Momentum Factor ETF, ticker symbol FDMO. So FDMO offers exposure. It has a bigger focus, as they say, into mid-cap companies, but there's also a decent exposure in large cap companies with this ETF. And with there being that exposure to the large cap, you can expect to have some overlap with the investments between this one and MGK. While this is a passively managed fund, it does, as they say, hunt the 1,000 largest companies with a positive price per share momentum. So it looks for companies, a great example of this would be a company like Tesla, who has been on a rally recently, and we've been seeing their share price steadily incline. And it's those kind of larger companies still experiencing that price growth that this fund is going to be seeking. I hope I said that right. I don't know if I really said that well enough to explain it, but hopefully you got the gist there. And that's a pretty good segue into my next point here. So two stock positions, or two positions that are unique to this one compared to the other two ETFs we took a look at today, are Tesla and Berkshire Hathaway Class B shares. So you don't get the awesome one that everybody's after, the Berkshire A class shares, but you do get exposure to Berkshire Hathaway, and that is one of the top 10 holdings in this fund. Other than that, though, I'm sure you'll see some similarities as I pull it up on your screen between these investments and the investments that we have in MGK. Now, taking a look here at the numbers, this is actually the cheapest, price per share wise, ETF that we've looked at today, and it comes in just shy of $40 a share. It does have a weighted average market cap of around 319 billion, making the companies inside of this smaller than what we'll see in MGK, but again, significantly larger than the ones we have in IJR. The PE ratio again for this one is 32. So right exactly where we're looking at, again, especially considering when we're looking at growth, not value investments for this time. It does have a turnover ratio of 14.3%, so falls in the middle between the other investments that we've looked at today. So again, pretty on par with what we can expect. The dividend yield also falls right in the middle between the other investments. This one is 1.06%. And as I was doing this, I actually thought it was pretty funny that the small cap ETF we took a look at actually has the highest dividend yield. Now, that probably has to do with those shares having a lower price per share inside of that ETF, but again, that's not a conversation for today. I just thought it was pretty funny that the small caps had the highest dividend yield. Now, while this is the cheapest investment to own price per share wise, it is also the most expensive one to own of the three when it comes to the expense ratio. This one's expense ratio falls at 0.29%, so nothing crazy, and I'll probably sound a little crazy saying this. That is a little high for a passively managed fund, at least from what I expect to look at or what I see when I look at ETFs. But just to reiterate, it's still below 0.3%, so it's still a very cheap fund for you to own. But when you look at passively managed funds, I generally like to see those around 0.15 or below. But nothing I'm going to lose sleep over, and nothing you should either, unless you only want index funds that are below 0.1%. So who would benefit from this investment? Well, again, very similar to the Vanguard fund. If you are somebody who's looking for growth but want to minimize your overall volatility in the market, this one might be one worth considering taking a look at. It is a little bit more on the aggressive side compared to the Vanguard fund, but not by much, and it does have those financially sound companies inside of this portfolio. Also, if you are somebody who just doesn't have that much initial capital to start investing, this one is probably going to be one of the more favorable ones for you, because with it being only around $40 a share, that means you can get exposure to some of these very large companies at a really good price. You know, again, Apple's around $300-400 a share right now. This is only $40, so basically you can buy 10 shares of this ETF for what it would cost you to buy one share of Apple, give or take. So again, if you don't have much capital, this could be a great place for you to look at. Well, those are the 3 ETFs that I have for you if you're looking to add some growth to your portfolio. If you have any questions on why I picked these, how I picked these, why I didn't do value, anything like that, please let me know in the comment section down below, as well as if you have any suggestions for me on how I can improve on these videos. Again, my biggest focus with creating these videos is to make sure that I give you quality information. I don't like sacrificing any details, but I also try my best to not make this as cut, dry, and boring as possible. I like to try to give it a little, or make it a little entertaining, so please let me know what questions you have, or if you have any suggestions for how I can make these more enjoyable for you to watch. But with that said, thank you so much for taking the time out of your day to watch this. If you like it, feel free to give it a thumbs up. And if you haven't subscribed already, I'd always super appreciate the subscribers. It's funny watching the number of subscribers I have. It just goes up and down so much, but seems like we're heading in the right direction. So I'm very appreciative of everyone out there that has taken the time to subscribe. Well, as I always like to say, you could be anywhere in the world, but you're right here with me. So I really appreciate that. Again, thank you so much for taking the time out of your day to watch this video, but I will let you go ahead and enjoy the rest of your day, and I'll see you tomorrow for Watchlist Wednesday.